I'm just going to be sharing with you this simple smart money strategy, okay? And I'm going to be giving you the step-by-step guide to actually execute the strategy flawlessly, all right? So it takes a little bit of practice, okay? Mind you, I've been using the strategy since 2024 and it has been killing the market, and it's pretty simple. Anybody can actually use this particular strategy to make money from the forex market. Enough of the plain talk, so let's just dive straight up to it. So right here, we're just going to start with this, okay? So looking at this, all right, first thing you're going to be looking for, you're going to be finding the institutional candle, okay? The institutional candle is a candle with great momentum, okay? It shows that the trading institution were actually involved in making this particular move. So therefore, that candle either creates a fair value gap. So, and you're just going to be looking for that right here, okay? You're just going to be looking for that right here, all right? Within this particular move that led to the break of this particular structure right here, okay? You're just going to be looking for that move, the institutional candle within this area that led to the break of the structure, all right? So when you find your institutional candle, the next thing you do is to actually mark what? Your sweep of what? Liquidity. All right. So the reason why you actually marking the institutional candle is to prove to the fact, to attest to the fact that this market actually have a higher probability of playing out. Okay. Reason being that the fair value gap or the institutional candle is more or less like a fair value gap, and that gap has to be what? Filled. So therefore, it provides a high chance of the market coming back to fill that area and then coming back to a PY. So you have your sweep of what? Liquidity, which is this. So the next thing you're going to mark out is what? Your break of structure or your change of character. Okay, so you mark out your change of character or your break of what? Structure. So you mark out your break of structure. So the next thing you do is to identify what? Your liquidity sweep. Okay, so there is your liquidity sweep you've marked out, all right? And then the next thing you identify is your structural what? Liquidity. And the structural liquidity, it's actually meant to be taken out, and it's meant for what? Inducement. Okay, so here is our structural liquidity right here. So you can actually mark that out for clarity. So the structural liquidity is meant for what? To be taken out, right? So it's meant to be taken out. You wait for the market to actually trade into this area. Then when the market trades to this area, then takes out the structural liquidity, then you buy from here. Here is what? Your PY, and then you mark the last bearish candle, which actually becomes your demand zone. You mark it out, and then you take your trades from here, and then you exit at this area. That is your target. Okay, it's just simple. Mind you, after marking out your structural liquidity, I skip that step. You wait for a second break of structure, which actually validates the setup. Okay, which actually validates the setup. So therefore, there's liquidity resting below. Therefore, there's liquidity resting below this area, and that liquidity has to be taken out for market to push to the upside. Okay, for any given market to move, liquidity must be taken out either from the bullish side or the bearish side. So now shifting to this, okay, so you guys can clearly see in this particular setup, what do you mark out for? You mark out your institutional what? Candle. So within this particular range, you mark your institutional candle, and that is more like a fair value gap. You look for your institutional candle within this particular area. So when you mark it out, the next thing you do is you mark out your sweep of what? Liquidity. All right, so you mark out your sweep of what? Liquidity, which is right here. You mark it out. Okay, so you mark out your market structural shift or your break of structure. So in this particular case, we just have a single break of structure to the upside. Okay, we have a single break of structure to the upside. So you mark it out. We have our break of structure. The next thing is you wait for the market to actually come and feel that imbalance on the fair value gap. So this right here, the reason why this happens, this move happens, is for inducement. All right, because there are many traders who are just going to think this market is actually going to start buying from here, and what happens, the stop loss ends up being taken out, and then the market taps into our supply zone or our demand zone, sorry, and then it moves to our target. So it's just pretty simple, your stop loss just slightly below, and then your target, just as simple as that. So right now we move to the practical side of it, where I illustrate everything I've just explained to you on the main chart. So the first one we're going to be looking at is the BTC USD. So guys, you guys can clearly see that this market is strongly bullish. Okay, I'm going to scale down to the small time frame. Can I be able to identify anything that's actually in alignment with my trading strategy? Well, I don't know, but let's just find out. We scale down to a 15 minutes time frame. So meanwhile, on the 15 minutes time frame, you can see that this market is strongly bullish. Okay, do I have a fair value gap on the 15 minutes time frame? The institutional candle, I think so, yes. So we have our fair value gap on the 15 minutes time frame. So therefore, this is in alignment with what our trading strategy. So the next thing we try to identify is what our sweep of liquidity. So right here we have our sweep of liquidity. All right, so the market took out the low, right? The market took out the stop losses below that area, and then these stop losses, this actually created a demand zone, which we'll come back to later, and that led to a break of structure right here. So we have our break of structure, our market structural shift. All right, so we have our break of structure or our market structural shift. So we just go ahead and mark that out. So the next thing we identify is our structural liquidity. All right, so you guys can clearly see that we have a high, and then that led to this low. That becomes our structural liquidity. But on this chart, looking at it clearly well, let me just adjust it a little bit. You can see that there are other lows which are actually closer to our PY than that one. So therefore, all of this becomes structural, our structural liquidity. All right, so we mark that out. Okay, and then we have our second break of structure, which is this right here, which aligns with what we have on the illustration we just did. Okay, we have our second break of structure, which is that. So therefore, the next thing we mark out for is our demand zone. So I go to the 30 minutes for a better clarity, so that I'll be able to mark it precisely. All right, precision is key. All right, you don't have to make mistakes. Right, so I mark out this candle. Okay, I drag it to the left. So therefore, this is my demand zone. So I'll be waiting to buy BTC USD from here to the high. Right, from there to here, I don't know, it might actually push up a little bit before coming down, but whichever case, if it pushes to there, whatever it pushes to becomes my current target. So I'm actually looking to buy BTC USD to 100k or maybe 102k or thereabout. So it all depends on. Right, and I've already seen the price action here. So the next thing we're going to be looking for is the Australian dollar. Okay, here we are on the 30 minutes time frame. So I just have to take this back to the 4 hours time frame. So on the 4 hours time frame, we can see that this guy is strongly bearish. Okay, so but then I'm just going to pick my trend lines, pardon me, but if you calm down, you're just going to see why I'm actually picking this trend line, because the charts, what I'm looking at is we have a descending channel here. Okay, so we can see that this market has actually been respecting this channel for the past couple of days, and that is pretty simple, which you can clearly see right here. The market respected, right here the market respected, and right here the market respected. Okay, so therefore looking at the high too, you see this is, but just calm down. Okay, I don't want to trade blindly, so therefore that's the reason why I'm actually doing this a little bit top-down analysis. We know that it's bearish. Okay, so therefore even I'm gonna scale down to my smaller time frame. All right, I don't want to buy and hold for too long, so that I will not end up having a win trade turn to a losing trade. Okay, so that's why I did my top-down analysis. I identified that this is what in a downtrend, okay, strongly bearish. So I go down to a 15 minutes time frame. On my 15 minutes time frame, it is temporarily bearish until it hits that trend line. Okay, that trend line from the higher time frame perspective. Okay, so we can clearly see that this is bullish, but short term. Okay, short term bullish. All right, we have this. It has broken out of this short term range, which is right here, short term channel. So it broke out of it, more like a bullish flag or thereabout, but we are not paying attention to the retail mindset. But I just brought you guys to that so that you guys clearly see the reason why this market is bullish. Okay, so but it's short term, like I said. So we can see that there is a high, there's a low there. So there's a high, there's a low, there's a high, but it did not take out that low. It don't take out the previous high. So therefore we have a sweep of liquidity, which is right here. We have our sweep of liquidity right here, and this is beautiful, guys. So next thing we're looking for is a break of structure, which we have right here, right? So pardon me, I missed a step, which is really important. Okay, so we have our institutional candle, right? We have our institutional candle, which is that you can see that fair value gap. Okay, if you go to the higher time frame, you still see this fair value gap. So we have a fair value gap here. So the market is actually trying to fill this imbalance. Okay, so it's actually trying to fill this imbalance, which makes this trade a very high probable trade. So we identify our institutional candle, then we mark our sweep of liquidity, which is this right here. So we mark our sweep of liquidity. Then the next thing we mark out is our breakout structure or the market structure shift. All right, so you can already identify that we have a low, we have a high. So all right, so here becomes this is the low that actually led to the break of that structure. So we're going to mark it out. So now let's go to the 1 hour or the 15 minutes time frames. I will be able to mark out my demand zone very well, very accurately. So we have this area right here, and just draw it all the way to the left. All right, so next thing I'm looking for is to mark out my liquidity area. So this one is actually internal. Okay, this one is actually internal. Okay, we have our liquidity, area. All right, liquidity. So I'm waiting for the market to actually come all the way to this area, and then I'm just going to target there. So this is pretty simple. Let me show you guys another example. All right, this one has actually played out, and I took the trade. I'll move to the 4 hours time frame. Pardon me, I don't intend to make this video too long, but from the look of things, it seems more like it's gonna be long. So the first thing we identify is let's look at this. Okay, I just wish I could close that other area. All right, so now let's look at this. Can we identify the institutional candle? All right, so we see this candle with strong momentum. That's an institutional candle, and then even the candle that still followed it signifies an institutional candle. All right, so you see that those are institutional candle, a fair value gaps candle. So the next thing we identify is the sweep of liquidity, which you can clearly see that we have a sweep of liquidity, which is that right there. All right, so we mark out our sweep of liquidity. Okay, we have that. All right, so the next thing we mark out is our break of structure to the upside or the market structure of shift. So you guys can clearly see that we have that clearly marked out. Okay, so I actually took this trade. Okay, and the funny part about this setup is, okay, the two setups or the two examples which I illustrated drawing the lines actually played out on this particular setup. Isn't that amazing? So the next thing we have is our demand zone. Okay, we have our demand zone right here. So you see, this was actually liquidity. All right, this was inducement. And what happened? There's some persons who actually thought this market was going to buy from here, and then not waiting for the demand zone which we have right here. So you see how the market came into the demand zone, okay, and then pushed all the way up. So this is our liquidity pool, okay, for inducement. Okay, it induced people to actually buy, and then what happened? The market came, tapped into our zone, and then the stop loss just slightly below, and then you just aim for your 1:4, 1:4 hour, the 1:4 hour. So now looking at the first example which I showed you guys, where we have two break of structure. So this actually played out like we have our first break of structure. Sorry, let me just adjust this. Okay, so we have our first break of structure, and then looking at the second break of structure. All right, so that means you have just taken this trade 2 times, and you have just had 2 wins in a row. So we have that, and then we have our structural liquidity, which is right here. We have all these are actually liquidity. Okay, so what happened? All these are actually liquidity. So you can see that. So what happened? The market just came, took out the liquidity, all right, tapped into our demand zone, okay, and then pushed all the way to the upside. You see, very, very precise, okay. See how it swept that low, okay. Just gonna go ahead and mark that out. So you see how it swept that low, okay, just a few pips, and then boom, to the upside. You have like your 1:8 weeks to reward. Perfect. Very simple, guys. Don't forget to hit the like button, subscribe to this YouTube channel for more and more videos like this.